So it looks like some of the participants are joining. So just 1 minute to go. Thanks for hanging tight, everyone. We're just waiting for the rest to dial in. So just grab the coffee and get comfy. And our fireside chat on the stablecoin will start shortly. So good morning, good afternoon, good evening, everyone. We have lots of different people joining from different time zones. And welcome to today's Fireside Chat. I'm Irene Lee, your host for this Studio AM sponsored event on stablecoins use cases across jurisdictions. Thanks for joining us on this exciting journey. So by way of introduction, I'm the Chief Compliance Officer and Head of Strategy, Digital Assets and Fintechs at a Canadian family office and a founding board member of the BC Art Technology Association of Canada. So I have deep experience in global family office, private banking, and fintech compliance. I advise on complex regulations across North America, Hong Kong, and China, bridging traditional finance with digital assets. So let's cut the chase. Stablecoins aren't just crypto stable cousins. They are reshaping the entire finance systems. So before I introduce you more about the use cases and our panel experts, here's some quick definitions that I can share and with some key stats to set the scene about the stablecoins adoptions in the world. So a stablecoin apparently is the cryptocurrency designed to keep a stable price by being patched to physical assets like fiat currencies, gold, or crypto. So its main goal is to reduce price swings, making it great for payments, value storage, and pricing. And there are mainly four types: fiat collateralized like USDT, crypto collateralized like DAI, algo ones like Terra USD, and commodity-backed ones like Patch Gold. I have done some researches as of today. The market cap of the stablecoins today exceeds $310 billion, with top players like USDT and USDC, you're probably very familiar with, leading the pack. And the transaction volume surpassed 5.7 trillion in 2024, with growing institutional adoption and retail adoption globally. And there are a lot of cost efficiencies on stablecoin adoptions. So like remittance fees as low as like 2 to 3%, and with a fraction of traditional methods. And in terms of global reach, we can see particularly very impactful in emerging markets for hedging inflation and enabling financial inclusion. So this is the stablecoin revolution. And before I provide more real-life world, real-world use cases, we have got top experts to break it all down. So let us meet them today. So we have Samantha Gell, who is a top Canadian regulatory expert in mortgage, real estate, and finance law, and a real friend of me. As CEO of the Canadian Association of Private Lenders and Fireside Trust Company, she's known for her forward-thinking approach and deep legal insight. And she was the former regulator at the BC Financial Institutions Commissions. And Samantha is really one of the most respected voices in Canadian finance. And welcome, Samantha. Hello.
Thank you.
And we have Amrav Hanifit-Fred. Amrav is a very sharp academic and data scientist at Fresh University in Turkey, and specializing in the tech heartbeat of stablecoins. He explores everything technical, really amazing. He got a lot of technical background. He will share a PowerPoint to us later on when he examines all the stablecoin specifics. So he knows about reserve mechanics and adoptions with the stablecoins and CBDC, and ensure digital currencies remain rocket solid and ready to scale in the future of finance. And Amraf's work bridges deep technical insights with practical innovation as well. So making him really a key voices in not just in Turkey, and also a stablecoin research globally. So we are here to explore how stablecoins are transforming payments, trades, and finance globally. So let's get started. So we have a very good attendees today, like full houses. So let me start with Samantha. Hey, Samantha, I want to get your take on the latest regulatory trends from the Canadian perspective. So I have done some research. We do see that Canada stablecoin regulations is still evolving, with calls from the Bank of Canada for like a unified federal framework. But Canada seems lags behind the US, as we can see, and the others in clear rules. And we do hear a lot of industry players when I talk with those people in Vancouver during some fireside chats and coffee chats. They really want to push for federal and provincial regulators to act faster for clearer definition, solid audits, and better integration with traditional finance. So comes with regulations like Basel III. So its liquidity and asset qualities are really key rules for traditional banks. But how would you, like Samantha, advocate for adopting these principles to Canada's stablecoin ecosystems? For instance, if a Canadian stablecoin issuer holds primarily domestic assets like Government of Canada Treasury bills, how would regulators assess their eligibility under this Basel III aligned framework? So Samantha.
Well, thank you. That's a very insightful question, I must say. And just to start off, I can say that Canada is a very cautious country. So it's a country that's watching other countries perhaps adopt some of these innovations much faster, much quicker. But in Canada, we are very careful to make sure that we've got the right regulatory touch, if you will, the right balance between permitting innovation and protecting the public through regulation, which of course brings us to Basel III. And, you know, if we can consider Basel III, the heart of it is to make sure that in a crisis, banks have enough top quality liquid assets to return customers' deposits on demand. So I think this logic carries over almost directly to stablecoins, because after all, if people using tokens like cash, they expect to be able to redeem instantly, especially when the stress hits. And so for a Canadian dollar stablecoin, I'd argue that regulators should expect to be fully reserved with assets like cash, central bank balances, or Government of Canada T-bills. So those T-bills are essentially the gold standard. They're liquid, they carry almost no credit risk, and they can be sold even quickly in distressed markets. So to align with Basel III, the regulator could set a liquidity coverage ratio of, let's say, 100%, which means that every dollar of stablecoin issued will be matched by a dollar of T-bills or similar assets. So I would want to see rigorous, regular stress tests. So we could ask an issuer if there was a wave of redemptions without losses or delays. And if they're mostly in T-bills, the answer is almost always yes. They would be able to handle those redemptions without losses or delays. But it's not just asset quality. It's also about having good collateral on day one. It's also about keeping those reserves safe over time, over the long term. So we need independent audits, frequent audits, along with rules on how much can be held in longer term versus overnight assets. And maybe we need a modest capital buffer to cover any operational risks. So my take is that if a stablecoin issuer sticks to strictly Canadian T-bills and has accounting transparency as strict as any chartered bank, regulators should treat its reserves as being just as robust as the banks. So that combination should qualify under a Basel III aligned framework. So that's my pitch here in Canada on Basel III.
Okay, thank you, Ken. Thank you, Samantha. Let's turn to Turkey. So, Emraf, I think you are very technical experts on the stablecoin side of things, from a Turkish perspective. I have also done some research on the global stats, and surprisingly, like Turkey really leads the world in stablecoin purchases, like relative to GDP, with buying hitting 4.3%, far higher than the other countries. So this mainly reflects Turkey's severe, I think, inflation and also the lira depreciation. I guess this is the reason why it pushes the people to adopt stablecoins as a hedge and store of value. And I know MREF has a PowerPoint to share, so let me put up the slides here so you can talk through it when you're starting answering my questions. So is it okay? Is it clear? In
Yes.
sharing the slides. Thank you. So my question to you, Amref. So what does the available numerical evidence tell us about stablecoin adoption in Turkey compared to other jurisdictions? So the floor is all yours, Amref. Thank you.
Yes. Thank you. Great to be here. I am from Fırat University in Turkey. Let me start by framing the theoretical foundation of our discussion, how stablecoins challenge traditional monetary assumptions. Stablecoins challenge the traditional assumption, especially the modern monetary theory, that money operates within national borders. They extend Mandel's optimal currency area theory into digital realm, where infrastructure and economic volatility, not geography, shape currency use. While central banks are still developing CBDCs, the market has already created its own alternative. This marks an early shift of monetary sovereignty from status to technology. Turkey illustrates how emerging economies must now be assessed not only by interest or reserve policies, but also by their crypto adoption levels. We can skip this slide. Yes, thank you. Now, let's take a closer look at a country that unexpectedly lets work in stablecoin adoption, Turkey. Turkey's 4.3% adoption rate reflects a modern version of Triffin paradox. Citizens are moving from national currency to USD-backed stablecoins, revealing a reverse Gresham law where good money is preferred. Low adoption in stablecoins economies highlights an inverse link between stability and crypto use, positioning stablecoins as an economic stress barometer. This marks dollarization 2.0, not through physical cash, but via blockchain-based, programmable, and traceable dollars driven entirely by market forces, not regulation. We can jump another slide. Please. Thank you. Previous slide. We can previous slide. Yes. Turkey's stablecoins ecosystem. Its title. Yes. Thank you. At this point, we are no longer talking about isolated user behavior. We are talking about a full-fledged ecosystem. Turkey's $63.1 billion in cross-border payments. And it means 1.7x its $13.8 billion in annual purchases, shows that stablecoins serve not just a store of value, but also as a means of transfer, revealing their high velocity of circulation compared to fiat. With 52% of adults using digital assets, Turkey has moved beyond the early adopter phase into mainstream adoption according to Rogers' model. Digital asset transactions equal to 17% of GDP make Turkey a global crypto laboratory. Stablecoins are now used not for speculation, but out of economic necessity, signaling that financial inclusion must now include crypto adoption. We can skip another slide. Its title is Exchange Activity in Turkey. Yes, thank you. Skip, please. Yes, thank you. What we observe here is not just a financial shift, it's a psychological and behavioral transformation in how money is perceived and used. The sharp rise of USDT-based trades on BTC Turk from 20% to over 50% 2025 signals a shift in the unit of account from Turkish lira to USDT, most fundamental of money's function. Yes, Turkish users increasingly think in USDT terms, not Turkish lira terms, a psychological anchor shift that challenges the very basis of monetary sovereignty and policy effectiveness. Yes, skip please. Okay. Let's now move beyond national examples and look at the global picture where stablecoins have evolved into parallel financial infrastructure. Stablecoins have evolved into transaction-focused rather than value-storing instrument. A $210 billion market gap, generating $26.1 trillion in annual volume, far beyond traditional financial benchmarks. From 2022 to 2024, market doubled to $155 billion, and number of stable coins tripled to 170. Yet 99% of value remains USD denominated, exposing a winner-takes-all structure, growing diversity but deeper consolidation. And this is $26.1 trillion volume surpasses GDP of many economies, signaling the rise of a parallel financial system beyond banks. The USD's 1990% dominance forms a geopolitical paradox. Stablecoins reinforced, not challenge, dollarization. For US, this creates a strategic dilemma. Strict regulation could protect consumers but erode its emerging digital monetary sovereignty. Yes, finally, the prevalence of USD-backed models shows that network effects are not enough. Strong fiat anchoring remains vital, explaining why many CBDC projects may struggle with adoption. Yes, Iran, jump in other. Yes, okay, thank you. Now let's turn from global totals to regional flows, because what truly matters is not just how much money moves, but where it moves. Okay. Stablecoin movement shows a crypto age Lucas paradox. Capital flows not from rich to poor, but from unstable economies to stable assets. Despite North America's and Asia Pacific's large volumes, Latin America and Africa, Middle East lead when flows are measured as a share of GDP. IMF's estimated $2 trillion total flow equals about 7 or 8% of global FX activity. Not yet systemic, but potentially so within 3 or 5 years if growth continues. Latin America's ratio mirrors its historic dollarization, but now entirely user-driven, not policy-led. Africa, Middle East demonstrate high crypto inclusion, skipping traditional banking from financial leapfrogging. Stablecoin flows align with economic similarity, not geography. While North America, Asia flows are commercial, those in Latin America and Africa are protective, showing distinct regional motivation. Yes, we can. Yes, okay, we can. Let's now zoom in the Middle East, where some technologies, stablecoins, serves completely different economic purposes in Turkey and Dubai. Dubai's stablecoin profile 93% of transactions, but only 6% of total value, highlights a retail-heavy market. The rise of Pareto principle. This indicates mainstream usage, but limited institutional activity. Turkey's $38 billion volume, double Dubai's $19 billion despite much lower GDP per capita, shows wider and necessity-driven adoption. Dubai's dominance in small value remittance reflects its migrant workforce sending funds abroad, while Turkey's $16.3 billion cross-border volume suggests it's emerging as a crypto bridge between East and West. Dubai's use is functional and remittance-based. Turkey is protective and hedging against currency depreciation. But yes, you can skip in others. Yes, okay. Next, examine how regulatory changes and market shocks have reshaped cross-border stablecoin flows, creating new crypto hubs worldwide. Chinese crypto ban became a textbook case of regulatory arbitrage. Capital flows didn't just move to low regulation zones, but to high demand markets like India, Indonesia, and Turkey, showing that demand, not regulation, drives adoption. The drop from $2.6 trillion 2021 to $1.8 trillion 2023 subsequent recovery illustrate the market's boom, boost, rebound cycle. Despite shocks like FTX and Terra Luna, crypto's resilience suggests a degree of anti-fragility. China's ban made crypto more decentralized, dispersing global volume once dominated by China. Emerging economies are now becoming new crypto hubs, signaling a shift in global financial gravity. As a BIS witty asked, defying gravity. DeFi may challenge traditional finance, but adoption still gravitates toward real economic need. Total decentralization, therefore, remains a myth. Yes, we can continue in other slides. Okay. Now, let's focus on emerging markets where what we call crypto is predominantly stable coins, not volatile cryptocurrencies serving as essential financial infrastructure. In emerging markets, crypto largely means stablecoins, as shown by Brazil's 19% usage rate. Volatile assets like Bitcoin and Ethereum account for only a small fraction of transactions. Main driver, currency instability, cross-border needs, value storage, and digital access mirror a financial Maslow's hierarchy. People first seek security, it means stable value, then pursue speculation. This high adoption rate shows that in emerging markets, crypto has become financial infrastructure, not just an investment. It exposes how IMF and World Bank inclusion efforts often mismark as users turn to stablecoins to fill systematic gaps. Each driver reflects a failure of traditional banking. Currency instability leads to loss of trust in central banks. Cross-border needs leads to high cost and delays. Store of value leads to weak local currencies. Digital access leads to limited physical banking. Yes, developed nations see stable coins as a risk. Emerging markets see them as a solution. This divide explains much of the global regulatory tension. Yes, we can continue to in other slides. Iran, please. Yes. To conclude this, reflect on why stable coins are no longer a niche topic, but a central question about very nature of monetary sovereignty in, yes, we lost our
sorry.
connection.
Let me put back
Yes.
the screen shortly. You can
Yes.
continue first. I would do the sharing later.
Okay, I'm continuing now. To conclude, let's reflect on why stablecoins no longer a niche topic, but are a central question about very nature of monetary sovereignty. The intense focus on stablecoins by major institutions 2024-2025 signals a paradigm shift. Just 3 years ago, IMF and BIS attention to this topic was unthinkable. Today, stablecoins are mainstream, centered on one question: is monetary sovereignty possible in 21st century? Turkey suggests it might not be. Even if central bank controlled rates, reserves, and capital flows, citizens creating parallel blockchain-based currencies can undermine traditional tools. This challenge extends to all emerging markets and could reshape global financial system in next 5 or 10 years. Yes, thank you, Iran.
Thank you, Emra, for a full examination about the adoption of stablecoins in Turkey. I particularly inspired like the relevance that you draw between stablecoins to the unstable economies and the influx of the wealth to the unstable economies and become a wealthy states ahead of the US and the other leading power. And surprisingly, I think everyone's probably wouldn't know that the lira Turkish is in fact the fourth most used fiat currency in the cryptocurrency world, as stablecoins and meme coins have like surpassed even Bitcoin in the country. So it is like a leading jurisdiction in terms of stablecoin adoptions in the world. So we have the voice from Turkey, we have a voice from Canada, and now I want to back to Canada, Samantha. As you mentioned about like all about the advocates that you want to mention about the principles of Basel III, the T-bills, the one-on-one asset patch, and all these regulations, and how cautious where Canada look at stable coins. So as someone like you who always preaches regulatory and industry perspective, because you're now a CEO of a Canadian lender association, and also you have owned your own trust company. And what key tensions really did you see, or do you foresee, between Canada existing financial regulations like OSFI, FinTract, and the unique characteristics of stablecoins? And how would policymakers and all the industry players and leaders are here, and how would you like wish them to collaborate to resolve all these, for example, like around reserve disclosure or other user compensation for fraud, and taking Turkey aside where they are really another animal, and the other side of the world where they have a lot of adoptions, and I think they have already spearheaded all the hiccups on the regulatory side. And Samantha, would like to hear your voice on this.
Well, thank you. Another excellent question. I think that if we take a look at a country's financial regulatory systems, we see that they're very complex. So we've got banking regulators, we've got different kinds of financial institutions regulated by those regulators, we've got intermediary regulators, and it's just like layer upon layer. And I think what it is that governments are looking to do is to superimpose some of those systems, those regulatory systems for fiat currency onto a stablecoin. But when we look at doing that, it's tremendously complex and not so simple. So it sounds logical, it sounds like it should be easy. But it won't be so easy. So there's as you said, there's a real tension between the transparency and guarantees we take for granted with banks, and between that and how most stablecoins have historically operated. So we've got banks, for instance, publishing detailed disclosures, and they're insured in case of failures. On the other hand, stablecoin issuers haven't offered much in terms of verified reserve reporting or user protection. We've got a hot button issue in reserve disclosure. So unlike banks, some issuers have only posted unaudited proof of reserves, and this is going to undermine the trust of the public. So there's now a move both from regulators and the responsible industry operators to push for independent frequent audits and clear reporting standards. This is going to give the public confidence and regulators real oversight. So I think that's fairly critical. I think fraud protection, if we can just shift the subject to fraud protection, I think we're also seeing a real lag with stablecoin. So right now, if your bank is failing, if you've got fraud, your account is compromised, your bank account, that is, you're likely to be made whole. There's insurance, there's the bank's own policies. We've got deposit insurance in Canada. With stablecoins, there's no deposit insurance, no standardized recourse. And so, these are really interesting questions. How are governments going to protect users with stablecoins? What levers are they going to pull? So what are we going to do to close that gap? So, one thing is we want issuers, they could be required to hold reserves in trust, not just on their own balance sheet, but hold them in trust. So users can have a legal claim if something goes wrong. And there's some assets in trust that can be utilized to compensate victims of fraud. And on top of that, we can add capital or insurance buffers to help protect users as well. So one really interesting discussion looks at, because I understand that the AML KYC regulation reaches far and wide in the globe in all different sectors. So the question is, we would expect governments to apply AML, anti-money laundering rules, that is, to the world of stablecoins. So this is, I think, where there's a real challenge in applying conventional fiat banking rules to stablecoin, for the simple reason that stablecoins are going to flow freely through the blockchain in a fashion without intermediation, without banks. You don't go to your bank to send it. It's all done with users on the blockchain. And so how is it that governments are going to be imposing AML requirements in that kind of environment? Is that going to be an issue? Is that a concern? And I don't think there's any really clear solutions for that. I think that, particularly in a country like Canada, we're going to want to see absolutely every industry participant comply with AML KYC regulation. But then, once you've got, stable coins moving from blockchain to blockchain, you're going to lose track of what's happening. So the peer-to-peer transmission of crypto stablecoins, I think this is one question there where there's no clear answer. And I think the only way forward, in all honesty, is to have robust collaboration We want regulators to set clear rules and support the industry groups to develop best practices. The industry, for its part, needs to lean into the transparency, ensure reserves are bankruptcy remote, and offer consumers disclosures that rival banks. But to solve problems, particularly like this AML KYC gap, I think that everybody needs to come together and contemplate solutions, and to try to build public trust. So we'll see how that develops.
Yeah, thank you, Samantha. I do have the same feelings where Canada still very cautious in dealing with all these new innovation. So sometimes I do think they are following the US
Yes.
protocols or regulations, but sometimes they they do observe what happens in Asia and China and Hong Kong, where Hong Kong, though is still at the early stage of adoptions, but we still see they are like implementing an ordinance and licensing regime, where in the recent news that we have heard there, we have over 30 applicants submitted the license applications to the HKMA for the stablecoin issuers. As you know that for stablecoins, it is not like kind of proprietary kind of obligations, and the private issuers can actually issue stablecoins if they do meet the capital requirements. So like talking about what Samantha meant on the regulations, advocacy, and all the AML stuff, maybe let me have an overview of the global regulations and licenses on the stablecoins of some of the key jurisdictions as a snapshot. So the popular US actually have signed the Genius Act on July 2025, where everybody already probably read all the full paper. And actually, this act defines the payment stablecoins and restrict the issuing entities to only licensed banks. So they have a really clear framework regulation on the licensing regime. And this is federally approved the non-bank entities or state licensed institutions. So large technology like companies need to pass the strict review of the Financial Stability Oversight Council before they can issue stablecoins. So this is the overview of the US Genius Act. So for Hong Kong and China, like what Amraf mentioned, so China has a full ban of trading of cryptocurrency, but does not really ban on the development of the blockchain technology and all the CBDC kind of pilots. And they have lots of technology companies where they can go to Hong Kong to submit license applications, and also collaborate with a lot of technology firms to test the waters in Hong Kong. So we have a stablecoin ordinance in Hong Kong already took effect on August 1st in this year. And when we look at the ordinance, and we actually, our family office has contributed comments to the public consultation when this ordinance first introduced. And actually, it requires that issuers must be registered locally in Hong Kong. So, and the key requirements is that they need to implement a one-to-one legal tender reserve systems, meet a minimum paid-in capital of 25 million in Hong Kong dollars, and establish strict AML and the CFT, that is the counter-terrorist financing review mechanisms. So all these basically mirror all with the securities ordinance kind of requirements and frameworks. So Hong Kong SFC and the HKMA has jointly formed this regulatory matrix. And we also have MiCA in European Union, which classifies stablecoins into electronic money tokens. So we can see different category classification from the global regulators will drive different regulatory restraints for stablecoin issuers. And inspired by Amraf, Turkey kind of adoptions about stablecoins, I do got some cases to share. So in Argentina, I think this is also a very push a pull factor for people to adopt stable coins, because with their peso really suffering from inflation and strict foreign exchange controls, so people can actually convert their peso income into USDT or USDC to preserve purchasing power. So in the capital city of Argentina, there's a Buenos Aires, more than really 100 merchants accept USDT and USDC. So they can do it through apps like Finance Pay and Lemon Cash, and people can actually buy a coffee or reserve a hotel room through the apps like Travala to use stablecoin to avoid the fees. So this is quite new adoptions even in Hong Kong, because we do have digital renminbi pilots, and we can use to pay it through an app, but not yet stablecoin adoption in Hong Kong. So what Argentina and Turkey give us a very great inspiration how financial inclusiveness has been adopted using stablecoins. And in Argentina, we can see citizens are turning to stablecoins as a way to hedge against inflation. So not just for a payment, the mode of payments, but they also adopt it for investments and also reserve their savings. And of course, stablecoins, everyone knows that they can be a base of the RWA, that is the real world assets. So a lot of developments on that front, though the government in Hong Kong and China wants us not to be overly excited about RWA. But still, when listed companies talk about RWA, their stock price will go crazily up. So we can see how the FOMO effect that is from RWA and stablecoins. So then back to Amrav. To your question, my second question to you. So in the context of Turkey, so how do exchange rate dynamics and monetary policy priorities shape the government's stance towards stablecoins?
Yes. Since Turkey is mainly on consumer side of stablecoin landscape, except for Bilira fiasco, the development of technical infrastructure and justification of frameworks that would serve major purposes, such as fiat-backed models, remain overshadowed by the USD Turkish lira exchange rate projections. As of now, apart from central bank digital currency initiative, a regulatory framework that would delegate issuance to private stablecoin providers doesn't seem likely in the near future. The government appears to aim at challenging the central bank digital currency toward appropriate policy making mechanisms. Yes.
Okay, thank you, Amrav.
Okay.
Thank you. And I think for Samantha, back to Samantha again, and apart from your hat leading the association on the private lenders, and you are having your own trust company, and I'm curious about the adoption in Canada, particularly on the private lender side. As I know that a lot of mortgage lending, credit unions, a lot of demands in Canada because they really need liquidity for their daily necessities. So private lenders in Canada often serve niche markets, I think, like underserved by the traditional banks in Canada. That is a really real truth. So in your role, do you see stablecoins playing a role in enhancing access to credit or payment solutions of these segments? Though I know government hasn't been issue a lot of articles, white paper, or consultations where we can speak up or contribute our voices. But if so, what regulatory guardrails would be critical to ensure this integration is safe and fair? So putting your hat on your ex-regulator again and as a private lender association CEO.
No, thank you. I think it's important to be forward-looking and to contemplate, what's coming down the road. So keeping in mind, that Canada is a bit of a laggard, I can say that, we do actually already have some fintech players in our market, looking to see how stablecoins can deliver value. We've got, the promise of faster settlements, serving borrowers who might, now be underbanked. And also we can tap into new sources of capital very efficiently. So for instance, a lender might be able to send a loan disbursement via stablecoin instantly, even outside of banking hours. They may be able to let borrowers make micro payments on, from a smartphone. So these are interesting ways that we can break down barriers that traditional payment rails impose on borrowers. So there's also interesting potential in cross-border lending and programmable loans. So with stablecoins, we can raise funds globally, lend locally, or we can set up smart contracts that automate repayment schedules or collateral requirements. We can top up collateral if the collateral is lowering in value, for example. So I think it has a lot of promise for lending because of its flexibility. But with, of course, these opportunities, as we've talked about for this hour, they come risks. So first, regulators ensure only well-regulated, fully backed stablecoins are permitted. So no fly-by-nights or algorithmic tokens that are really not backed by anything. Lenders should adhere to the same consumer and protection disclosure rules, regardless of whether it's a loan paid in cash or a stablecoin. Guardrails need to cover things like making sure lenders can't sidestep usury laws. Here in Canada, we have criminal interest rates of 60%, so you can't loan above at an interest rate of 60% or more, and there are interest rate caps throughout the globe. Each country has their own way of policing that. So we would want to make sure that those usury laws are adhered to. And then there's the problem of defaults. We would need to clarify how defaults are handled. And then, again, with AML compliance, we need to figure that out. We should have segregation of client funds, cybersecurity standards for any technology that we use, and a transparent dispute resolution mechanism. So these are all things I think that we need to look to have a future in private lending using stablecoin. So I'm enthusiastic about stablecoins as a tool for inclusion and efficiency, but we want smart regulatory perimeters providing clear rules, oversight, and importantly, ongoing dialogue and trying to figure out what this should look like. And again, balancing innovation and safety is going to be key. But I think if it's done right, this would be a win-win for both lenders and borrowers and advancing innovation without introducing really any new risk into the financial system. So I think private lending is a promising area for stablecoin for sure.
Yeah. Do you anticipate Canadian regulators would like issue some of the licensing regime, like similar like what Hong Kong is doing in the near term? Do you anticipate?
I actually do. I actually am optimistic. We've had some of our government bodies, like the Bank of Canada. We've got representatives from these bodies giving speeches. And I think all of the global movement in this area, I think will prod countries like Canada along faster than perhaps Canada's comfortable with. But I think it's going to be hard for countries to compete in the global financial environment if they're not adopting innovations like stablecoin when all the other countries are adopting it. So I think it's going to be something that I think every country is going to have to look at and examine for sure.
Yeah, and I think for scaling up the stablecoin adoptions, we need really a full fledged of ecosystem and also the industry supports. It is not like retail adoptions that we have a lot of transactions from the retail public, but we may need to have like private lenders or the other kind of community to have adoptions on the ground. And inspired by all the Turkish, Canadian, and Argentinian adoptions, let me also share about what happens in the mainland China. Though we know that China has a strict ban on the cryptocurrency trading and also on the mining activities, but we do see that they are starting to talk about the stablecoin regulations and for the usage of the yuan-backed stablecoins for the first time. And when you look at the recent news and the recent spokesperson from the State Council and the China's cabinet, I think they are starting to review, possibly to approve a roadmap later for this couple of months for the greater usage of the currency globally, so that for the internationalization of the renminbi, and Hong Kong could be the really great city, a special administrative region to test the water and have the full adoption for the offshore yuan adoption with the stablecoin technology. So we can see that the senior leaders in China is likely really to deliver a lot of tones, papers, policies to define what is the boundaries of the applications and the collaborations with the CBDC in the country and also on the digital currencies globally. So things is still in a very fluid mode now. So we have heard a lot of case studies, licensing regimes, applicants foremost, and with the coming few months and by the end of the year, probably we do see more regulatory cases, regulatory voices, and use case coming along. And thanks so much for Samantha and Rev for really fruitful discussions and sharing with our audience here. Maybe let me take a pause here and see if there is anyone in the audience that has questions for us so far. You can simply unmute yourself and ask questions to any one of us or throw the questions to all of us, or you can type your questions in the chat box. Let me pause here and see if anyone would have any question, or share your use cases or adoption or your personal experience from your country. Anyone here? So we have some quiet audience here. Let me see if, oh, that is a question from Juan, from PH Juan. So is mutual recognition of stablecoin license between jurisdictions achievable? Really great question. And given that we are under geographic tensions, that's really great questions about like geopolitics issues, geographical tensions, the Hong Kong-US tensions, and all about SWIFT, shifting from the SWIFT and all the people being banned by SWIFT. And that, is there a mutual recognition of stablecoins licenses between jurisdictions achievable? Maybe to you, Samantha, first, as an ex-regulator in Canada.
I think it could be achievable. I do think though that you're recognizing some challenges globally. So we've got countries moving at their own pace. We've got countries that are really committed to their own regulatory regime. I think as we adopt things like stablecoin, it'd be interesting to see how we could have, some kind of mutual recognition of licenses. I think it's going to be complicated. But I think just as you've got banks that operate in jurisdictions other than their home country, I think it'll happen with stablecoin issuers too. I mean, there'll be some countries which are friendlier than others. So I think it is possible, but we'll wait and see how that all unfolds.
Yeah, it will be a massive project globally where Emirates mentioned about LMF and all the supranational powers where they need to sit together and compare jurisdiction and all the currency controls and all that. I think it's really difficult to have a mutual regulations. But with that in parallel, maybe all of the jurisdiction already have their own regime and then start collaborating globally for the remittance, global cross-border payments, I guess. So we do see John tapping raised up his hands. Do you want to unmute yourself or switch on your camera and show your face and ask your question? Hi, John.
Hey guys.
Hey, hi.
Awesome. Honestly, it's great. I think it's really cool. You have 3 totally different regions of the world, which are going at completely different paces. So I am a Canadian by origin, tech entrepreneur in the blockchain crypto space. And my question to you guys is a little bit philosophical, forward-looking. There are assumptions made on finance in terms of accepting the technology, but I think what's being lost is that the world is adopting this. EMRA clearly demonstrates what happens when an economy adopts it and people use it, and we're going to continue to do that. So looking forward and how Hong Kong is essentially positioning itself within the world as becoming a financial player in this space, we're redefining the boundaries of banking. Traditionally, you talk about Basel III and leverage ratios and all that stuff, like early days of banking, how we get set up. And now we're kind of moving into a new age where banking is no longer geographically restrained. It's really interesting how Emma's talking about how it's not geography, but the economies that are connecting people in terms of the usage of these technologies. So with that in mind, as we look forward, how do you guys see things playing out as the technology adopters as we start to use stable coins, which backs the tokenization of real world assets, being able to largely purchase and own the late adopters in a way? And how do you see the landscape? PK was talking about geographical tensions. How do you guys see that redefining the boundaries from Canada's perspective? Quietly, without regulation, if we look back, Binance, one of the leading platforms, like Emerald was talking about Binance all the time, that's a Canadian startup. Ethereum, that's another Canadian startup. And Tether, all the legal, everything, that was all written in Toronto. It's a Canadian startup. So when you look at 3 of the big players in the marketplace, and Bitcoin, some of the developers were also Canadian. But when you look at the marketplace and you look at that, those 3 companies had to leave Canada to become successful, but they are now literally taking over the marketplace, and they will eat Canada after they're done kind of conquering. How do you see that reshaping the global ecosystem? Because we're talking about the movement of capital and it's becoming free. So how is that going to reshape the way borders are drawn, the way economies are drawn, the way people are able to capture and retain their value? Like you talk about Argentina, the peso, wherever they're using down there, has like astronomical inflation. So they just go to USDT because it's stable again, right? Turkey has high inflation, similar situation. You use USDT because it's stable, so you stabilize the economy with an underlying currency, and you're an early adopter, and then you can leverage that to future value. So I'm curious to get your guys' feedback. It's really cool. You have 3 totally different perspectives.
Yeah, this is one of the purpose of the
Fireside. It's so cool. It's so cool, you guys. It's so cool.
So John, as a Canadian, I'm actually very concerned about Canada. Canada is a very frustrating country because we've got these provinces, and actually crypto is regulated provincially under our Securities Commission. And I just feel like we just get bogged down in regulation and these, our provincial borders, and it's difficult to move forward. And so as one of the laggard countries, I'm concerned that we will be left behind. because I think that your observations are bang on. And that we need to look forward and we need to adopt quickly. I think we've already got some idea of what we need to do in terms of regulation and protection. And I think that we're going to be pulled along by, you know, Hong Kong, by United States, by Europe, in that direction. Yeah, I think your observations are good.
Yeah, I think John is spot on. As you mentioned, all the top crypto firms, technology firms originated from Canada. That's what I know. And you as well originated from Canada. But you also face a lot of difficulties when talking to the regulators, governments, and even the banks, right? The banks is not so friendly after all. Yeah, so it's really a bit of sorry about all the things happening on the ground. And luckily, for example, like what Samantha mentions, even in China or in Hong Kong, we do have a channel to speak up about our concerns and the latest developments of the overseas jurisdiction. We can contribute papers, comments, at least directly to the government officials. For example, John, perhaps we can line up together with Samantha and Emrav to form a group to talk directly with some of the top voices in the government to advocate some of the things that we can push forward, taking reference from Hong Kong and China, because as you know, a lot of immigrants are from China and Hong Kong, and the inflow of investments are really targeting in Canada. So without more friendly, accommodative regulations here, I do not see that we probably will lag behind of all the global asset allocation with the new assets, right? So I think we can take actions from here. The good point is that Canada is still lagging behind, but slow does not mean we cannot act faster than the others. So we still have time and we can buy time, and we can start off from here with baby steps. And maybe for your quick reference, for the geographical tensions you just mentioned, and that is the really good kind of tone of voice when talking to China and Hong Kong, because they need to be act faster, because if there is any sanctions against the technology company and we have been banned in using SWIFT or the US dollars, the really great alternative would be the central bank backed currency or some other stable coins backed by yuan or the Hong Kong dollars. So the development pace or the urgency in developing stable coins here is really huge. It is like a mission from the country government and central government. So the tension actually may be a trigger for some of the development in the unstable economies like the other countries we have mentioned. So I think great opinion from John. I don't know whether you have anything want to add on or want to join us.
All I'd say is kind of we're in this really interesting situation where you're talking about governments backing the currency, and it's almost we're really getting to a point where it's like, when are we going to have a Basel IV conversation? Because that's when countries start to have to get on the boat and join the party, and it has to happen pretty soon.
Yeah, and really thanks. And what Ivan also put up on the chat, Ivan Lee, thank you for your comment. He said, honestly, nailing the timing across 3 regions is seriously impressive. And really, we are from a distinct 3 corners of the planet for the time differences and also the language as well. So Emrav is Turkish, and I'm speaking in Hong Kong Chinese Mandarin, and Samantha is a Canadian, a native speaker. So totally different. And we have a lot of people here across the world. And thank you so much. And maybe to a closing, really thanks so much for everyone joining and sharing their deep insights, particularly Emrav and Samantha on stablecoins from really both regulatory and technical angles. And really appreciate Emrav to pull up all the specifics on a nice PowerPoint, and we have learned a lot. And we have covered a lot today, from global trends and local impacts. I think for the key takeaways from today is that we may invite people from here or the others to join forces to take some actions proactively, maybe in the form of white paper or some kind of dialogue with the regulator directly with the country. For example, with the Turkish government or with the Canadian government or the regulators, or from the Hong Kong side of things, I can take the lead in bringing this all together. So if everyone is interested, do PM me and show your interest, then we can do it all together. And thanks everyone for joining us on this Studio AM sponsored Fireside Chat. So stay curious, excited, and keep exploring. And thanks so much. Goodbye.
Thank you.
Thank you, everyone. Thank you.
Bye bye.
Bye bye.